I was making $300, $400, $500 sometimes on a weekend, selling jeans from the trunk of my car. I just made $750, and then I'd run back and leave because, we were fighting over making $50 for a day. There was just so much liquidity and so much paper. I'm a capitalist pig. I'm looking for opportunities around the market everywhere. Like, everybody always thinks, as a market maker, I want the public to lose money. Every public order that came in there, I wanted them to make money, because the only way I was going to make money is if they came back. I think it is gambling, but I'm gambling as the casino and not the gambler who comes to the table. Every day I see the market, I see opportunity. I see a $50 bill on the floor.
I appreciate you taking the time. I've been following you for a long time, but I didn't realize, when I first started following or getting into options, which was more than a decade ago at this point, I didn't realize that Tasty Live was a whole entity or thing. You sit there on YouTube, you try to get concepts and look things up, and you're like, okay, well, here's a video of someone talking about something. And it's like, okay, well, I understand this little nuance or idiosyncrasy, but over time, I slowly start to realize that, this is a whole media company, think tank, however you want to describe it. And personally, I've gravitated towards you more specifically than anyone else, just the way you think and the way you, I would say, manage your positions and just overall your outlook. And so I really want to take a second to just sit here and get to know you a little better. And I have a very specific audience that tunes into me. If you can see here, I got a Tesla ticker shirt on.
Sure.
This is from a shareholder meeting. Most of the people who follow me are one of two people. Either they're really into options and trading, which I've only recently started telling people about what I do with that. Okay. But most people follow me because they are risk takers, and a lot of them are all in Tesla investors and have been since like 2015. So I know it's a little interesting. I'll talk to you about some Tesla stuff at the end, but I just wanted to at least get you to understand like who the audience who might be watching this, so that we can maybe tailor the conversation to
Absolutely. I want to.
Cool. Perfect. So maybe before we just dive into option stuff and strategies and all that stuff, you're a New York guy. You're from Brooklyn. I actually went to college on Long Island. I went to a military academy there.
Where on Long Island?
Great Neck, Merchant Marine Academy.
Sure. I lived in Selden for about a year or so.
Okay, gotcha.
My guy's a little crooked up and see. Looks a little crooked. Anyway, go ahead.
But as I believe a Brooklyn guy, how does, besides obviously Wall Street and all that, the energy there, how do you even get interested in the markets and options, eventually become a market maker and all that? Like, can you like just talk about your story and how you stumbled upon that? And correct me if I'm wrong, you kind of got in at the perfect time when you started off your career. Like, unless, AI is lying to me, but yeah.
No, it's better to be lucky than good sometimes. And I was the luckiest unlucky kid. I grew up in Brooklyn, New York. If you want to go all the way back there, I was a good student. I was from a broken home. My dad wasn't around too much. He, in Brooklyn, I always say, if your father's a bricklayer, you become a bricklayer. If your father's a doctor, you become a doctor. If your father's a hoodlum, you become a hoodlum. My father wasn't a bricklayer or a doctor, so I was destined to just be, following that same kind of footsteps. And I think I was just too good. My mom just made me too good, too kind to be that type of person. So I knew I had to get out of there. When I left New York in 79, 80, New York was bankrupt. So they hadn't hired any police or firemen or any kind of sanitation work or transit authority for a couple of years. And when the city came out of bankruptcy in around 1980, just before I left, they were hiring like everyone. And a city job, in my neighborhood in Bensonhurst, Brooklyn, was about the best thing you could get. You know what I mean? Pension after a couple of years. You don't have to work too hard. Everybody bucks the system. Everybody has an angle. That kind of thing. So all me and my friends, we signed up, and I got accepted for transit authority, and the police. So I could have gone into either one of those two. I already told you a story where my father wasn't a bricklayer or anything else like that. So I wasn't going to go to the police, but I was going to go to the transit authority. My best friend Mark actually went to the transit authority, and he's gonna next year he'll be retiring. So with a great pension, and you didn't have to work too hard, and it seemed like a good thing to do. I decided to take my mom's car, which means she took the bus. Yeah, to Chicago. So I drove to Chicago by myself when I was about 18 years old, and my mom, sacrificed and took the bus to work, so I could have the car. And I had a cousin who traded out here. Well, not actually traded. He worked for Shearson Lehman Brothers, which is now defunct. But he worked for Shearson Lehman Brothers on this new thing called the options exchange, which was, I don't know if people remember this. The options exchange was made out of the smoke room and the bathroom of the Board of Trade. So the Board of Trade had this big trading floor. They started the options exchange, and they actually made it in the bathroom of the Board of Trade. And the smoke room, because you were allowed to smoke back then, not on the floor, but just off the floor. You'd go downstairs and you could smoke. As it got bigger, they took over the smoke room. So it really started in the bathroom of the Board of Trade and the smoke room of the Board of Trade. So yeah, when you say, you got lucky, or the perfect time, it was the perfect time because options started in 77 or 79, and I started trading in 83. So it was in its infancy, and who knew it was going to be what it is today. But I had that decision, one door opens, one door closes kind of thing, could have gone, the route of being a city worker, which would have been a phenomenal job. Or I could have taken a shot and come out and maybe become a trader, but I didn't know what trading was. All I knew was, a seat on the New York Stock Exchange on that time was $1 million, and a seat on the Board of Trade, or actually the CBOE at that time, you can have them for 30, 40, 50 grand. So I didn't have any money, but 30, 40, 50 grand seemed a lot easier to get than $1 million. I was never getting $1 million. So the decision, if I was going to do this, was pretty easily made. And everybody in my neighborhood, we were pretty close. The kids that I hung out with that got my high school diploma. I did go to college for 3 months, John Jay College of Criminal Justice. I hated it. I became the best air hockey player that John Jay College had ever seen. But it just wasn't for me. So I ended up coming out to Chicago, and I'll be honest with you. I don't know if you remember. Maybe they still have them. I don't know if you remember, like Jordache jeans and Sassoon jeans. They were like the first kind of designer jeans. They used to sell for about $50 a piece at the time. I would get them, off the docks in Brooklyn for, I would sell them for two for $25. I think I was paying, $5 a piece for them. So I would get them for two, I would sell them to you for two for $25. And it was a great, deal for everybody. And I was making, $300, $400, $500, sometimes on the weekend, selling jeans from the trunk of my car. And when I came to Chicago, I was making, $500, $600 a month as a runner on the floor of the exchange. So it was definitely, not without its downfalls. I mean, but I burnt my boat. It's an old saying, you really got to leave everything behind. And I left everything behind and I gave it the best shot I could. It took me, I don't know, 3 years to save $5,000. That's what I started trading with as a trader on the floor. You can't do that anymore. If you have $500,000, you're probably really undercapitalized in today's market. But, for me, $5,000 was really undercapitalized. But at least it was a point of entry, which is not a point of entry anymore for people. And you had to be successful from day one. My expenses per month, not when I first started, but when I first started, my expenses per month were probably maybe about $400 or $500 a month. I didn't have a clerk. I was on what they called a small brown badge, which they called a Midwest badge. It only allowed you to trade like 6 or 8 stocks that nobody else wanted to trade. So all us kids and 21-year-old kids, because you got to be 21 to trade. would trade these e-liquid stocks because nobody else wanted to trade them. But the stock I was trading was called Superior Oil. Got taken over. It was the busiest, most volatile one, which was good for me. But it got taken over, so it was going away. So I had to make a decision whether I want to stay on this small brown badge, which a lot of guys I met there decided to do, or when this pit broke up, because it was the most popular brown badge pit, you can go on a big seat, which now your expenses go to about, at that time, maybe $4,000 or $5,000 a month from, a couple $100 a month. You can go on a regular seat, and you can either go into this new product called the OEX, which was the S&P 100. It's still around, doesn't trade very often. The S&P and the SPX, the 500, have really become popular, but this is before even those were around. So you could trade the OEX, which was a composite of 100 different stocks, the 100 most capitalized stocks. Or you could go into an equity like, Boeing or General Motors or IBM. And of my friends that decided to make the jump to the larger badge, I was the only one that went into the OEX, and everybody else went into equity pits. And at that time, again, perfect timing, being lucky or whatever, the OEX really took off, and the equities got really, dry. There wasn't a lot going on there, and I would trade a couple of contracts on the small brown badge, like 20, 30 contracts a day. So, you're doing 2s and 5 lots for each trade that you make. Mm-hmm. And, within a week of being in the OEX, I was doing 50s and 100s and 30s, in per trade, because there was so much liquidity. I could buy something at $1 and it would be trading $106.25, which is a teeny. It's the smallest it could trade. Remember, markets weren't penny wide. They were, we did everything. It wasn't decimalized yet. We do everything in 16ths and 8ths. So it was like a 16th and 8th, 3/16, a quarter, 5/8, that kind of thing. So markets would be, 3/4 of a point wide sometimes, an eighth wide, $12.50 kind of thing wide.
What exactly were you when you say you're trading, are you acting as the market maker, or were you taking your own trades at that point?
Right.
Like just Tony wants to do what Tony wants to do.
Yeah, no, great question. I should have been more specific. So there were 2 ways you could have gone. One was a broker, which means you would, just like you are, just like I am basically today, or our TastyTrade, my brokerage firm is today. They would get a phone call to a central desk. The desk would call the exchange. The exchange would then call the broker standing in the pit, and the broker would represent the trade, and they would get $1 in commission or whatever their commission was. Or you could be a market maker. A market maker was somebody who, traded their own money, or, pooled money together and became part of a group of people, and then, took a kind of a split on whatever money you made. And if you lost, usually you had to pay all the losses, and the splits, were like, 60-40, 70-30 your way. But, they would give you some capital to trade with. I decided to do it all by myself. I just took my $5,000 and gave it a shot. So I was making market. So a broker would yell out, OEX, 100 calls, what's the bid, or what's the offer, or what's the market? And I would say 1 1/8. And if I was first, he would sell them to me, and I had the option to keep them all or split them up with the people around me. And, if you didn't split them up with the people around you, the next time somebody else was first, they didn't split them up with you. So made a lot of friends by, I was very quick. I was kind of big. I was tall. I was young. My ears still worked real good.
I've heard that all market makers were like tight ends, essentially, just big guys.
Pretty much.
Yeah.
I mean, I'm not the biggest guy. I mean, I'm 6'1". I mean, at the time I was probably, I was probably only 180 pounds or something like that back then. I mean, I'm 225 now, but most of the guys, if you could block out the sun, the person behind you couldn't, hear or see the trade. It left more for you. So size didn't matter. And it wasn't about how much you could trade. It was just, pure size. It was a great, advantage to be larger, again, lucky, than good, you know what I mean? That kind of thing. So I only traded my own money. So I would just make a market. I would say 1 1/8, and he would say, sold bat, I'll say you 50, and I would take 50. And then, if other people were yelling, the second and third guy, I'd say, if I got 50 of them, I'd say, all right, 15, 15. So I would take 20 and they would take 15 a piece, or I would take 30 and I go 10, 10, kind of thing. And I would sell them each 10 a piece on the bid. And then we try to sell them at $6.25, $106.25. And, if you had a 10 lot, you made $62.50 in a couple of minutes. Or, if you had a 30 lot, you made almost $200 in a couple of minutes, and I would try to do that. I would trade 3, 4, 5,000 contracts a day, sometimes scratching a lot, losing a lot, making, money on a lot of them too. So I would go out to my friends with my card, because everything was pen and paper. You remember, there were no computers. And I would show them, like, look, I bought 50 of these at $3. I sold 50 at $3.25. And then I bought them back from the same guy at $3.50. And I sold them to $4 to this guy across the pit. I just made $750. And then I'd run them back and leave, because, we were fighting over, making $50 for a day. And, it was just so much liquidity, so much paper. If you stayed nimble and you didn't, marry a position, there was a lot of fat to be made. So, I went from, trying to make, $100 a day to trying to make, $200 a day, $500 a day to $1,000 a day. And I never left the pit. You know what I mean? If I made my number, $1,000 a day sounds like a lot of money. It's $20,000 a month. There's 20 trading days, and your expenses are $7,000, $8,000. So now you're down to $13,000. And you got commissions and everything else like that. You got another couple of $1,000 in commissions. You make $1,000 a day, you really walk away with 500. You know what I mean? Clear kind of thing. So there were expenses to be had, but there was a lot of risk too. But like I said, if you stayed nimble and quick, and you were smart enough, learned how to spread and stuff, you can make a fucking hell of a living.
So I got two questions for you then.
Sure.
So first of all, we went straight from, you decided to take big risks, leave your family, leave everything you know behind you, which, by the way, I feel like you don't see a lot of that these days. And maybe I'm biased as I get older. I'm looking down on people younger than me. I'm 35 in a couple of days.
30. Well, happy birthday. Happy birthday early. Yeah,
thank you. I appreciate that.
I'd love to go back there. I'm going to be 63. So it's been a long time. I've been doing this since I'm 21. Well, I've been doing it since I'm 18, but 21 trading.
That's amazing. Yeah. And this is why I wanted people to, I wanted to expose your knowledge to a new audience that probably doesn't know about you guys yet. Sure. I know everybody is messing around with options. And the more I see people messing with options, the more I'm like, oh my goodness, you have no idea what you're doing. You don't even know what you're saying. Like, you're going to get yourself blown up. And the content you guys create, the way you guys talk about things, it's humbling, but it will keep people from being blown up. And, frankly, selfishly, I just want to talk with you and pick your brain about stuff as well.
Well, I mean, here, when you build, now you're getting to building businesses, you know what I mean? As opposed to an individual. We're building a business, Tom Sadloff has been my friend for 40 years. The first business he started, Thinkorswim, I thought it was a joke. What do you know about running a brokerage firm or anything else like that? And believe it or not, it was supposed to be a mutual fund store. It was never supposed to be a brokerage firm. So it's supposed to be a mutual fund store. That was the first concept of Thinkorswim, was mutual funds all under one umbrella, and you could pick out what mutual fund you wanted. And it evolved into a brokerage firm. He never went the mutual fund route with the whole thing. So when he was doing that, I said, "This is a joke, man. What do you know about this kind of thing?" So you're trying to get, when you're building a business, you're trying to get a big funnel, right? Like you are right now. Like you have me on, and I'm talking about options and all trading. You're gonna have another young guy on here, who's slinging it all every day. And posting his trades and everything else like that. And, he's making thousands, losing thousands every day. We're trying to build a big net here. Most of the people we speak to are, people of means, or whatever that means, right? I start with $5,000. If you had $50,000, you were a person with means. If you had $10,000, you were a person with means. To me, now maybe that number, has changed. But back then, it was a little bit different. But when you're building a business, you want to build a big funnel. More people come to your store, the more money that you're able to make. So we try to talk to the masses. We do things for smaller accounts. We do things for larger accounts too, because you're trying to be, which you never can be, everything for everybody.
Mhm.
But that's why there's people, like you, and there's people like my son, trades differently than I do. So yeah, our business model is trying to put you in winning trades, high probability trades, so you can manage winners, smaller winners, and try to beat the S&P, which is, fairly, it's doable. I don't want to say easy because nothing's easy, but it's doable if you stay disciplined.
Yeah,
You're
I,
trying to make your 5,000, 10,000, or people that maybe watch your show are trying to, they're newer in their career. And I think you should risk it all. Like you just said, you don't see a lot of people doing what I did today, you know, 30, 40 years ago. Well, I wish you did, because you got more technology, you got more knowledge, you're a lot smarter than I was, or we were, when we were doing this. You have more access to capital than we did. I mean, I had to sell my coin collection to get a fucking dollar. You know what I mean? Like, you think I'm kidding you. Like, legit. I saved, my coin collection for 15 fucking years, and I had to sell it. I got 25 or $2,700, I think, for my coin collection. It was basically everything, I had. You have friends, family, go work Uber, for crying out loud, and
mm,
save that money while you have a regular job. I sold jeans. I had to do something illegal from the trunk of my car. You got so many ways to make money, but you got to put the time in, and that's the key that I find. And I have 5 children. That's the key that I find, that sometimes putting the time in, putting the work in, isn't what everybody wants to do.
we're actually almost exactly 3 weeks with our first newborn. So,
Oh,
uh,
congratulations, man! Nothing better.
thank you.
I
Yeah.
remember. I
Uh,
remember that.
yeah, it's exciting.
Sure.
It's honestly, I can't tell people enough to go have kids.
Yeah.
Um,
Great.
so I agree with a lot of what you just said there. And maybe I'll push back a little bit on one part, but
Sure.
I kind of grew up similar to what you're talking about. I always had this fascination with money. I wanted money. I don't care how I had to get it. In fact, when I was really young, I disappeared from my parents and they couldn't find me. And the local store down the road called my parents saying, "Hey, your son's here trying to ask for a job to dust our store." I like showed up with a tire. I just wanted money. And
Uh-huh.
then I couldn't get a job at 5 years old. And so I started stealing money from wallets. And I got in trouble for that. I'm like, well, what am I supposed to do to get money? So finally my parents started paying me to do chores. I'm like, I just want money. Fast forward, I'm always had a job as soon as I could, from tutoring kids and working in a
Mhm.
pizza shop and ice cream shop. And I would save money, going into high school to try to buy my car. And then my stepfather, ironically, I kind of have a rich dad, poor dad story. It's
Okay.
almost identical. And my stepfather, he worked in Silicon Valley. He invests his money and all that. And when I was 15, getting ready, or almost 16, getting ready to get my license to be able to buy my first car, I'm sitting there. I got $3,500 saved up. He says to me, "Hey, I know you're wanting to buy a car with this money, but you got a birthday coming up, and I had this idea of, like, we could open a brokerage account for you, but Fidelity requires 3,000 to open it. I'd be your custodian. And before you can finish, I'm like, let's do it." So I never bought my first car until I was out of college. And I've been in the market since. So to your point, the sacrificing, the lane gratification, the take the risk, I could not agree more with that. And like I said, I don't think people take enough risk these days, but I do think people take enough stupid risk these days, meaning they learn about what options are for 2 seconds on a clip. Oh, you can get rich doing this, or you can make 7 grand a month, whatever. And next thing you know, they're buying YOLO call options
Sure.
on Tesla at $2,000 expiring in December, and they put everything in there.
Yeah, because they want to
That's a
get rich quick.
problem.
Yeah, that
Yes,
is a problem.
it's
Yeah.
a huge problem. So you're right. The accessibility is out there. It's crazy. You talked about scrounging for 5,000. You don't need 5,000. You
No, you
literally
don't.
don't. The access to market, the friction is none. The barrier to entry is none now. Fidelity does not require you to have 3 grand to open a brokerage account anymore.
No, nobody does. You can open an account, with any amount of money. Matter of fact, at TastyTrade, you can sell naked calls at an IRA if you have an IRA account. Again, the access, and you can trade multiple exchanges, and you can trade crypto all in one place, and it's free. I mean, stock is free, which is too expensive for people to do. I mean, $100 stock, $10,000, 5,000, maybe people just don't have that kind of money to do. But you can do an option strategy for, $1,500 in buying power, where simulate 100 shares of stock, where it would take you $15,000 to buy 100 shares of stock or sell it. So the point of entry is cheap, and the knowledge is, you can go online and get knowledge. Some of it's not great, but you can go online and get a decent, know-how. And if you find somebody like you did who's willing to teach you, and that's our whole shtick at Tasty Live. I allegedly know what I'm doing. I don't know what direction the market's going to go in any more than you know what direction the market's going to go in. But here's how you can do it using a lot less capital. Here's how you can do it having more risk. Here's how you can do it having defined risk. And then you pick what you want to do.
Yeah, no, I agree with that. The message I keep trying to tell a lot of people is to stop thinking you know what's going to happen. Like, again, for us Tesla investors, we got earnings coming up tomorrow, and Tesla just had record deliveries, and then November 6th is Elon's comp package vote for his $1 trillion package.
Close, right? Tomorrow.
Correct.
Just to be clear. Yeah.
Yeah, correct. And so, a lot of people have this bullish bias, and they think, well, between that and the comp package November 6th, all that going on, how can it not go up? And to me, it's like very easily. It could very easily not go up. It could all be priced in right now. Right.
It's had a nice run too. I mean, the argument there is it's had a nice run with the rest of the market. So
exactly.
So you talk about perfect timing just for a moment, and I have no idea, which way Tesla's going to go. Although at the last I looked, I'll do it right now for you. It's got about
plus or minus 10%.
Yeah, maybe a little bit less. Yeah, about $30 for the next 3 days or so. But we'll see what tomorrow brings. Probably volatility increase a little bit, so it'll be pretty close to your number, I would think. You talk about perfect timing. Here's the argument for Tesla to fall. Market's at all-time highs. How much higher can it go? Tesla's basically at all-time highs. It's as high as it's been. Where else?
470. Yeah.
Right. I mean, I'm yearly. I'm not talking all time. I'm just saying. I mean, it's the highest end. There are in hindsight, if it goes lower, that'll be the argument that everybody will make. In hindsight, if it goes higher, it'll be all the arguments you just made a moment ago. So nobody knows. So how are we going to maximize our assumption? That's what it comes down to.
So let's talk about that real quick. That's a nice transition into let's zoom out. Let's forget options. Forget Tesla, any individual stock. You just mentioned market's at all-time high. Yeah. Gold, minus today's pullback, is an extraordinary high.
Sure.
Bitcoin is interesting at the moment because it's essentially kind of around all-time highs, but at the same time, when the market starts to get a little spooked, Bitcoin's selling off and it's not acting like that reserve. Meanwhile, we got the Fed cut in. It seems like things are once again easing up with China and the US. I mean, we could keep going on. What's your take right now, having lived through the 80s, the crazy rate hike situation there, going through the 90s, the dot-com bubble. Oh, and that's the other thing, right? The AI bubble, right? Everyone's talking about that, but going through a dot-com bubble where a lot of people are trying to make analogies to it, but Cisco's not the same as NVIDIA. Cisco had what you could call dark fiber that wasn't being used, whereas there's no GPUs not being used right now. Dot-com bust, we had, I believe, rate hikes happening. Now we're going to rate cuts. So they're not exactly analogous, but yeah. And then you've gone through 08, 09. So what's your take where we're at right now? Obviously, with what you just said, we don't know anything either.
Right. So I'm gonna miss the top because I've been after a couple of fades. I'm a contrarian by nature, but I'm not stupid. I mean, I didn't, when I traded, the Dow was was 1,000. Okay. I mean, in the heyday of the beginning of my trading, you've got the Dow at 4,700. If I was 47,000, if I was a contrarian, I'd be out of business. So, I mean, I'd like to fade moves, but we haven't had a down move of any substance to really kind of, say this is, the top is in kind of thing. We have 1, 2, 3 day moves, and then we rally right back. So until we see something different, I'm going to be a dip buyer. I mean, I think it's the smart play. It's the hardest, in my eyes, it's the hardest play to make.
I agree.
It's been, but volatility is low. 1920 is low for volatility. You get volatility into the 25, 30 range, and the market goes lower, and it goes lower by whatever it be, 10, 5, 10, 15, 20%, whatever it does. And then when you see volatility start to contract, that'll be your next buying opportunity. Until then, I'm cautiously, bullish. I think this administration seems to be positive for the market, as most administrations seem to be positive for the market. Let's call it, as it is. Nobody's trying to kill the golden goose that lays all the eggs here, the golden egg. So they seem to be pretty pro Wall Street, and I don't know, interest rates could go lower. I mean, you make a good argument. I mean, many countries have lower interest rates than we do right now. I mean, food inflation is horrible. But the rest of inflation is pretty much tame, lower than what was expected. If you're going to be a technical analysis guy, which I'm not, I'm just putting little stupid things in an argument where, it seems like every pullback should be bought. But we do seem frothy. Gold at on Friday, when we had that big spike up, I got on the show on Monday and said, and the CME raised margin requirements on gold and silver. I said, that is typically your bell ringing. Like when the CME on the way, they raise it on the way down too. When gold and silver, big moves lower, they'll raise it. When they reduce the margin, it reduces liquidity, and that move usually stops. So if we're going higher and everybody's leveraged because every day it goes higher, buy the dip kind of thing, and then they change the margin requirement, that's usually your bell, your aha moment. And it took a day or two to happen, but you've got it today. Where I mean, you look at gold and silver down 5-7% right now. So
where do you see that? Where do you see that they reduced the margin? Like, how does one look at that?
Well,
I have no idea.
I have positions.
Oh, okay, that makes sense.
So you get a
They'll tell you.
You get a notice that says, we're raising your margin, and that's done by the CME. That's not done by the brokerage firm. But you can go to the CME website. It tells you pretty. It's not the greatest website for finding information, but it tells you pretty clearly what the margin requirements are for future.
Okay. Yeah. So before I truly learned about you guys, I started this YouTube channel, which again, this is more of a hobby for me, just to have a means to talk to a lot of interesting people. But if you can see my YouTube channel and my X handle is called Investing Against the Grain.
Yes.
So ironically, I'm also, I guess, contrarian by nature, but I never called myself that until I started watching you all. But with that said, I'm with you. I feel the same way about kind of buying the dips right now. In the Tesla community, you can get a lot of love and hate real quickly. And, when we were at 470, I was telling people, guys, I'm ringing the bell on a lot of this, and I had a bunch of call options. I'm like, I'm walking away. I'm walking with money. I don't care if it keeps going higher. I won. I'm not going to lose.
Yeah.
And it seems like people get stuck with this mentality. And you said it earlier. You're not gonna hit the top. You said that.
Yeah.
People get this weird psychology of thinking if they are not at the same amount of their all-time high in their brokerage account, that they're down. Like and that's not normal.
So I'll tell you, I never look at my P&L. Like, I never look at my total. I never look at anything. I mean, I know how much is there. Don't get me wrong. At the end of the day, I'll look. But while I'm trading intraday or anything else like that, I think it messes me up. So I've never, because if I see that I'm up too much or I'm down too much, I won't behave in an opportunistic way. I mean, I'm a capitalist pig. I mean, I'm looking for opportunities around the market everywhere. And if if you have a $10,000 account, you're down $1,000, you're down 10%, your arms are going to get short. I mean, like, you're not going to be as willing to just, see opportunity and seize it. So for me, I try not to look as best I can.
Let's linger on that for a second, because
Sure.
I actually got in a, let's call it, healthy discussion with Tony in Chicago back in April when I first met you guys.
Mhm.
And I was telling him, you guys need to be able to have reporting where I can see my P&L on a monthly basis. And he was so adamant against it. And I'm like, you need it. I already built it. I'll give you the code. I have it. I literally pull it from your website and I built it already. I'll give it to you. And he was so against it. And I don't agree with it. And you just said it as well, but maybe you can clarify a little more.
Sure.
What do you mean you don't look at your P&L? I feel like you have to know your P&L at least on a monthly basis to know, are you fucking up or are you not?
Well,
You got to ground yourself somewhere. And it can't be yearly, because that's not enough. That's too long of a gap. You're not going to make a decision after a year to decide, okay, I need to iterate on this. That's not enough time to get better and hone yourself.
Right. I guess I just don't like to put fences on my potential. I guess that's what it comes down to. And you said you had a conversation with Tony. You mean Tom?
Or excuse me, Tom. Sorry.
Yes. But I don't think we've had that conversation.
Yeah, he's like, no, I don't want it. I don't want it. We got other things, all these other priorities. I'm like, dude, I'll send you the code. It'll be done. You don't have to do it.
As easily as you built it, as easily as we can build it. And I guess if our customers want it, it'll get done. I mean, we have 500 employees. We should be able to make.
I'm starting a movement. I've talked about this. And a lot of people are like, guys, we need this. Everyone start petitioning. We need this.
Yeah. So, everybody always asks, like, how much can you make trading? And I don't know. So I always ask, well, how much risk are you willing to take? And that's how much money you could make or lose, trading the market. So I think, if you're used to making, let's just use round numbers, $100 a day, and all of a sudden you're up $130 or $150 a day, do you ramp it up, or do you slow it down? I guess that's my question to you.
Neither. So it's not about that.
It's a good answer.
To me, the reason I like to track my P&L, look, you have a portfolio, right? Let's say it's 100 grand, and you're putting on trades at a certain size, and you shouldn't be getting too big or getting too small. Like, you should be consistent on your sizing. To me, placing the trades are easy. It's very, very easy. It's kind of one of the things I want to talk to you about next, about how you manage things. To me, the skill set that I'm trying to help teach other people, and I think you guys teach, is not placing the trade. Like, that's easy. It really is, especially the way you guys lay it out. That's not when the work starts. The work starts is managing the trade.
Sure.
And when you watch your P&L and you track it, that's where I think you start to learn. And that's where you start to get good. And that's where you start to learn how to risk mitigate and when to leave things on. If you're up on a position and it's up 20%, the very next day, take that off.
Yeah.
Why would you leave that on?
Well, so now we're doing the same thing, only you have a pie chart that shows you how much you're up or down. So I'm saying the same thing. I'm saying manage winners, no home runs, singles, doubles, and triples. You want to trade the home run, trade futures, more power to you. This 50-50 shot. I sold here. Last night, I sold gold futures that I was down $80 on. I woke up in the morning, I was up $130 on them. So it's a 50-50 shot. Okay. I had to have traded small enough where I can go to bed being down 80 handles on it to wake up to be up 130 handles on it. So
you sold it at the money?
No, I just traded futures. I just traded /futures.
Gotcha.
So, I sold them again when they went a little bit higher, and I was out about 80 points on them because they rallied last night, after the close, about 40 handles or so.
I hear you on that.
What's that?
I hear you on that when it comes to managing a winner.
Comes down to size. So, I mean, if your futures are a 50-50 shot, but if you go into a spread, like you said, because you said you had naked options, like, you had call options in Tesla. You got to take them off. When do you take those off? You know, you buy a call option at $2. When do you take it off? When it's $4? When it's $8? When it's $6? You know, when you
Yeah.
lose.
So
I mean, it's hard to say. If you have a spread, you know, I bought a spread at $3, it can go to $6. All right, when I'm up $1, I'm going to take it off. When I'm down $2, I'm going to take it off. You know, it's easier because it's going to be a much smaller, slower moving. But you know, that's why I don't believe in hedging. Like, how do you hedge a position? Like, if you're long 500 deltas in Tesla, which is like 500 shares of stock in Tesla, you're bullish on it. How do you hedge that? How do you hedge it? Like, sell calls above or something like that? Now you put yourself into a spread. Sell some stock. You know, now you're going counter to where, you know, you thought the stock was going. So I know there's things you can do to mitigate risk, but I don't call them hedges because I still want the stock to go higher.
Oh,
Like,
yeah, I don't either. Yeah, people tell me all the time, like, if I have covered calls on, they're like, oh, so you're shorting Tesla. I'm like, in what world is selling covered calls at $500 a short to you? It is a bullish position. There's no other way to slice it. But so I hear you on that when it comes to managing your winners. And that, again, I would also quantify as easy. You know, you only have to have those moments where, oh, I'm up 20%. And then next 3 days, next 2 weeks, you're down 10% to finally get out at a 40% profit. You learn. In the managing, where I think the skill set really comes in, is managing what you guys call your problem children. And just real quick, for anyone listening, if you are hearing us talk and you're like, this sounds interesting, I don't know all the stuff they're saying, go start watching TastyTrade, Tasty Live content. You can subscribe to me. I try to talk about these things. I do little courses here and there every once in a while when I'm feeling froggy, just to try to help people make less stupid mistakes is the thing I care about. I care a lot about financial independence and all that. But anyways, if you're in a position and it's working against you, well, this is what I want to talk about. What you do. The closest thing I've heard you talk about, you know, and I've watched more hours than I would care to admit of you. So I know you pretty well. Okay. But the only thing I ever really hear you talk about when it comes to managing is if you know, let's say you have naked strangle on, or and your deltas get about 15, you'll try to roll down the untested side, cut the deltas in half, and you'll work it that way. Yep. So here's my question. Intel pops 30% one day overnight. You got to trade on that. That's not going to work. You're going to have to manage that. So here's the question. What do you do in those kind of black swan events, whether it's Intel, whether it's yen carry trade, whatever, and maybe not even just a black swan event, but you've been trying to cut your deltas down, but next thing you know, you're at a 40, 50 delta on one side, and it's like, well, there's no more cutting that delta down. Are you of the mind where, okay, you know, Tom's thing of buy the guts, sell the wings? Or do you have a point? Like, I'll tell you what my rule is. Sure. I don't do anything with the position. I'll do what you talk about, cutting the deltas down. But if it's not in the money, I don't touch it. If it's not in the money, the probabilities are working in my favor. Yep. If it goes in the money, I will leave it until at max I'm down 300% on a position. If I'm at 300%, that's done. It's over. Ring it, and that's a untouchable rule for me. Okay. And I leave it there, and it's worked out. I'm going to let you answer the question for me because we're going to have the same answer. You you're a Tesla fanboy, right? You love Tesla. Tesla's great. I mean that in a respectful way. I don't mean that in a bad way. It's all right. It's a polarizing cup. I've had it both ways, but I know you're too kind. Kindly, I didn't mean it any other way. I just meant that you know every tick of Tesla this year, pretty much. I do. I'm watching it right now as we're talking. Sure. So when Tesla went in January, it went from like 400 to 200, right? It means like a month and a half, 2 months or something like that. You had to have been long Tesla at some point during that 400 to 200 move. What'd you do with your position? When it went from 400 to 300, were you long it? If you weren't, when you bought it at 300 and it went to 250, what did you do with your position? So with my shares, I didn't do anything with them. With my covered calls, I just kept rolling them down. Okay, so you're reducing. So if you bought the stock at 300, let's say it was reducing my cost basis. Yes, okay. That's your cost basis, and now you're selling 250 calls. You're actually,
quote unquote, people would say locking in losses. Now you're really not. You're just trying to lower your basis. But at that moment, if you were an accountant, you're down money, right?
Yep.
Well, I do the same thing that you just said. Like you said in Intel. So I don't have a bias in Intel. I was in an Intel position. I went up 30%, like you said. So it
Oh,
hurts.
were you?
It hurts when you mention it. Okay. So it stings a little bit. So maybe I tried to mention January in Tesla just to get back at you. I'm kidding. But I did have a Tesla. I did have an Intel position on, and at that point, you have to say to yourself, well, the market. Sometimes stocks win. Like sometimes the market beats you, and I have a big ego, but P&L tells me my ego, when it's right and when it's wrong, and I'm 100% wrong.
But when do you look at that P&L? Because you don't track it.
A daily P&L, it's easy to see right on the position tab. I could see that Intel had a comma or two next to it, and everything else didn't have a comma to make up for it. So I knew I was screwed. I mean, listen, at that point, even trading small, it stings. It takes away 10 other profitable trades, just for argument's sakes, and especially if you didn't ramp up. And I didn't ramp up because Intel's not that much of a trading stock. Tesla, if I had that kind of move, it would really hurt because I like to trade Tesla. It's very liquid and, there's a lot of movement in it. There's a lot of bang for your buck for it. Intel, you're just trying to make a couple of dollars because it's Intel. So at that point, you have to say to yourself, do I love this or do I hate it? And 9 times out of 10, I hate it. And I will, buy the guts or buy the position back for a huge loss. And then, maybe sell some naked calls because I want to be a contrarian that are out of the money and hope to get 10 or 15% of what I just lost and make believe that I know what I'm doing, that kind of thing. So
you don't have like a max loss you'll take on a position. Like if it's not overnight,
the market's going to dictate that. I have a mass size that I'll trade. Let's just talk small for a second. Let's say everything you do is 5 contracts and your max is 10 contracts. The only way you can get hurt is if you go to 20 contracts because you're used to that P&L from 5 to 10 contracts. You're used to making it back. You're used to ringing the register. The numbers don't seem so big because they're everyday numbers. As soon as you go from 5 to 10 to 20 and 25 or 20 and 30, all of a sudden the numbers get huge. I'll tell you one quick story for a second. I was a pretty successful trader from the moment I stepped on the floor, or the moment I started trading, from 1983 to 2005. But around 98, 99, the markets really dried up and there wasn't a lot of option trading. I went from 2,000, 3,000, 5,000 contracts a day to 20, 30 contracts a day, trying to make the same amount of money with a family, 5 kids. Well, at that time, really only 2 to 4 kids, but, kids, wife, family, house, vacation home, it's virtually impossible. So I decided to form a partnership with a guy out in California, very sweet man. I'm not going to mention his name. He said, go do what you do and we'll split everything 70-30. I told you I never worked for anybody before, but I lied. For 6 months, I worked for somebody. So I was going to trade big. So let's just say, for argument's sake, like I said in my earlier story, I was doing 30s, 50s, and 100s. If you got a 50-50 split or 70-30 split, you can't trade 100 contracts anymore because you're just giving some of your profits away. And you really can't even trade 200 because you're really only getting 140 for yourself at 70-30 kind of split. So you got to trade like 300 contracts to make it work, right? Like to maximize or at least try to get something. The numbers got so huge for me mentally that I don't think I ever had a losing month trading in from 1983 to 2005 when I was a market maker. I don't ever remember having a losing week, to be honest with you. And in the day of the crash, I had my best day ever. So, and I'm talking about the 87 crash, not any of the .com crashes of now. So I've always been really tight and pretty good with my trading. My numbers got so big that I had 5 months in a row of losing trades. And the gentleman stuck with me. He had no problem with the money. He was a very wealthy individual, and I was a man of means too. So he knew it was legit kind of thing. When I got that account back to even in that 6 month, I broke up the partnership and I said, I can't do this anymore. And he wanted it to continue. He says, you finally broke the code kind of thing. I said, no, man, the pressure's too much for me. I can't do it. Even though it wasn't my pressure, it was his money first, not mine. It was just, I just couldn't do it. So it all comes down to size.
It's funny you say that. I've got two friends. One's my best friend growing up. We both grew up on the East Coast of Florida, Space Coast. Mm-hmm. And the other one is this Brazilian immigrant who came over here to New York. And anyways, we became really good friends. I taught both of them how to trade. Just, I showed them my mechanics, entries, a lot of what you guys do. Defensive is, a lot of what you guys do as well. Also kind of like I was telling you, like my hard limits. I like to be very mechanical on the exits, but they've gotten very good. And to your point, like months and months without any losers or anything, to the point where the immigrant, Donnie, he's an entrepreneur. He's started like 4 different companies. He's always trying to do new things, but he knows a lot of people. He wanted to start a kind of a fund where we would trade with other people's money. And, we talked about him, like, that does sound exciting, but I don't think it sounds fun trading other people's money. I keep coming back to that. It's why, my background's, I'm an engineer, who should have always probably been on Wall Street, but I hate the idea of doing things with other people's money. I want to do things with my money. My money's fun. Other people's money is not fun to me. And I don't know. I wonder if like you also kind of resonate with that, because you said, when you went onto the floor for the first time, you're like, nah, I'm just going to use my own money.
Well, funny you should mention that, because, like I told you, or maybe I didn't mention it, but it took me 3 years to save $5,000. And when I finally saved the $5,000, and I had to be 21 years old. So I started, on the floor when I was 18. So the timing worked out great. My father called me up, who I hadn't spoke to, I spoke to him infrequently. There was a time there we didn't speak for a couple of years, but that time I was speaking to him, infrequently. And he said, if I gave you 50 dimes, can you make it 100, in 6 months? And I said, 50 dimes, like in $50,000? He says, yeah. I said, I'm sitting here eating Spam, fucking legit eating Spam,
Hey, don't knock Spam. Spam and eggs.
I'm not, but it's I would candy it. I would put cloves in it and cut like skewers, like lines in it, and put honey on it just to change it, just to make it different. I mean, you tell me you got 50,000 to give me, but I got to make it 106 months. I'm eating Spam for the better part of 3 years here. I said, don't ever fucking talk to me again. So, and he didn't for about 3 or 4 years after that. So, I don't think I had it in me to trade anybody else's money, but that was a humbling experience, because I really could have used that money a couple of years prior.
Hey, I mean, I think sometimes I think those moments are what make us, is what I've found.
I don't know. I mean, it's hard.
I'm not saying it's good, but like you also don't want to take away the resiliency and the struggle you had to go through that gave you.
Now hold on 1 second. You need a lot of breaks. So when I started trading with $5,000, no clearing firm wanted to take me, because if I lost $5,000, the clearing firm would be on the hook for it. So when I was a clerk or a runner, I elevated myself to what they call a crowd clerk. So I stood in the crowd, and like I was in the General Motors and Pennzoil, which was an oil company, pit. And there were a couple of guys there, 4 or 5 guys that cleared to this one brokerage firm. They traded all their own money, but they cleared to this one brokerage firm. They needed to do stock, and there was no handheld computers or anything else like that. I mean, I'm going back into the late 80s and early 90s kind of thing. So they would come in, they would call me Tony and say, Tony, buy me 1,000 shares of GM. So I'd have to do hand signals, buy 1,000 GM, at the market or at a price, 7/8 or something like that. And they would do this to the clerk who might be, 20, 30 yards away, standing in a booth. And then they would call up New York and they would buy the stock and then they would give me a fill back. I would give them the price. So I got to know these guys and I would keep all their stock positions, how much stock they bought and sold all day long against all their options and stuff like that. So I got to know them. So one guy, his name is Kenny Weiss. He's still alive. Great guy. He's in his 80s. Plays tennis every day. He's got a beautiful life. He's very healthy, and God bless him. He should stay that way forever. He said, nobody's going to clear you with $5,000, so I'll clear you after $5,000. Meaning, if I lost $10,000 and I only had $5,000, he was going to put up the money. He didn't take a dime from me. He just did me a favor. Like he just vouched for me because I was a decent kid, and I had worked with with him for the last year and a half, 2 years, and then he let me stay in his office. The other, we call them Johnnies, the people who are undercapitalized, they would have to stay in the hallways or in the break room and do their positions and everything else like that. The big shot traders who had made it, had offices, a couple hundred feet, 300, 400, 500, 1,200 feet offices where they would hang out in. They'd have a couch, TV, relax. He let me go in his office. So it elevated me with all the other Johnnies. I was still a Johnny, but I was talking to a guy and picking his brain who had wisdom and knowledge, who had done it, who had made it and kept it. A lot of people make it. They don't keep it. You make $1 million, you lose $1 million, you're down $1 million because you spent some. You know what I mean? Like, he taught me a lot about just being a person too. Like, you have to be a decent person. Like everybody always thinks as a market maker, I want the public to lose money. Every public order that came in there, I wanted them to make money because the only way I was going to make money is if they came back. The only reason they're going to come back is if they make money. So a good, equitable, fair fill for them, I always had the opportunity to make a couple of dollars. I didn't have to make tens of dollars, but I had an opportunity to make a couple of dollars. If they get a good market and they're a decent trader and they can eke out a living at it too, they come back time after time after time. They get bigger and everybody's, it's a win-win. So everybody needs to help everybody else out. There's no magic sauce here that, if I tell you something, I'm never going to be able to make money here again because markets are dynamic. They change instantly. You just got to learn how to manipulate the market. And by manipulate, I mean, just maximize the amount of money you have to give yourself the most leverage that you want to take.
Yeah, I love everything you just said there. And I agree. People do need to help each other out, but
it doesn't cost you anything, man. And I used to joke, be nice to the people on the way up because it's the same son of a bitches on the way down. You know what I mean? Like, when you're doing good and everything's great, you be an asshole to everybody. When your time comes and you got to take a hit a little bit.
And it will come. It will come.
You meet those people. It's the same ones just standing there waiting for you. Believe me, they're waiting for you.
No, I believe you. Let me ask you this then. So transitioning a little bit just on your perspective on this.
Mm-hmm.
Maybe I'm wrong, but I imagine you're kind of in a little bit of a bubble because you've been a market maker, you've been in this world, you have your own brokerage, you guys trade, you got options. But outside of that bubble, there's a lot of naysayers when it comes.
I'm a co-founder of TastyTrade Live. I don't own a brokerage firm. I mean, I have a vested interest. I own a lot of shares in it and everything like that. I was there from the beginning, but I don't own it. We're a publicly traded company. But go ahead. Yeah. I'm sorry.
And I will say for anyone listening, because I get asked all the time, where do I trade? It's TastyTrade. I'm out of Fidelity. I can't. Fidelity is archaic. If anyone's still in there and you're trading options, you can't. Like,
thank you.
Go TastyTrade.
It's our space. We've been doing it a long time, so we try to make it user friendly as possible.
Yeah. Yeah. And I think there's so much. I have a question I want to get to, but there's so much people don't understand about you guys. And I don't think you guys do a good enough job, if I can be a little critical about owning it. IVR, that's you guys, right? Like, I think 2018 is when you guys started talking about IVR. It came up with the concept of it. A lot of the names that people just take for granted, like broken wing butterfly or just whatever, that's them. Like, I believe you guys had influence on 0-day options.
We had to sort of create, well, not me, Tom, TP, I forget who else was there, we actually invented, and I know people think this is bullshit, but they actually invented 0-day options. We call them quickies. And the CBRE, yeah,
That's the two things people are going to take from this. Size matters in the pit, and quickies.
quickies. We call them quickies. And the CBRE, when we went there, said, if you tell us about this idea, we own it. We can't have anything without them supporting it. We're like, sure, okay, fine. We don't want anything for it. We just want to offer it for our customers. Think it'd be a great idea. And they sat on it forever. And then 10, 15 years later, they came out with daily options, which are really quickies. If you know anything about it, they're really cool quickies.
I think people just don't know enough about like how much influence you guys have had. And again, I know in your world people know, but the rest of the world they don't. Which, getting back to my question, outside of people who trade options, outside of people who actually know more about options than what it means to just buy a call, right? People who actually understand, the 4 different ways you can play an option and the ways you can group them. People tend to think that there's 3 categories. You've got investing, you've got trading, and you've got gambling.
Mm-hmm.
What's your take on this? Are they all really the same thing because they're all probabilistic? You're taking a certain risk analysis. Is there a point where trading is gambling or trading is investing, or is there a binary for you on what is what? Like, what's your take? Because again, out there, people who just buy and hold, if you mention options, they think you're just gambling.
So I think it is gambling, but I'm gambling as the casino and not the gambler who comes to the table. I get to choose what I want to do, and I get to choose what strategy I want to do. So I think the biggest profit margin for a casino, I think of the slot machines. I mean, I think I'm not, because they can set whatever they want. Like, they could set it to a 90% payout, 85% payout, 97% payout. So I think that's the biggest money maker for casinos. So if casinos can have their way, they would only have slot machines in their hotels, and that would be the only game to play. If you're going to go gamble, you gamble using slot machines because it's the best payout for them. And it's the same thing here with trading. I could set my probability of success. I could have a smaller, very high probability of success with a lower amount of money to make, like a slot machine that's going to pay me 85, 90, 95% of the time, depending on what I want to set my parameters at. Or I could trade something big like futures that are a 50-50 shot, or an in-the-money call or put, which is basically, a 50-50 shot, and have those parameters. So for me, it's like, yeah, I think it's gambling. Yeah, I think it's safe to say, but it's gambling as the casino, not as the guy who's getting the free drink.
So if I buy 100 shares of Meta or Tesla or anything, is that gambling too?
Yeah, it's a 50-50 shot. I mean, it's the best gambling you can do, because even if you go to like a DraftKings or something like that, there's a reason why, there's a market. You can't just trade it at one binary number. And even binary options and binary trades are skewed to the wrong side because everybody buys them, nobody sells them, kind of thing. Markets are always inverted there. So there's always an edge to the house. So yeah, I'm gambling, but I'm the casino. Now, when you buy stock, you're taking a step, or sell stock, or even just trading futures, you're taking a step away from the casino, and you go to the other side of the table, and you're gambling as a patron, but at a 50-50 shot. No vig, no rake, no free drink.
No free drink, yeah. I've come to the opinion, and I think I've thought about this for a while, but I would say in the last 3 months, I feel very strongly about this now, that people who just buy stock are the real gamblers when it comes to all this.
Yeah. Because
they don't know, and really this you could apply maybe the parts of this for people who trade as well. But if you ask someone who buys 100 shares of NVIDIA, when are you going to sell it? I don't know.
Yeah.
What? So you don't know your exit. You got your entry in based on what? How do you know that's a good price for it? With options, you know when the contract ends.
Yeah.
You know the probabilities, and you can choose what your probabilities are. You are cognizant about the risk you're taking. Most people, when you just buy stock, you don't have any of that. You are literally just doing something because you've been told that that's what you're supposed to do. You're supposed to buy SPX. You're supposed to invest in the Max 7, and you just hold, you buy and hold because that's what you do. Don't know anything else. Don't learn anything else. Just do that. And then when you retire, you will know no more than what you did when you started your first job and you invest in your 401k.
Sure.
And to me, that's brainwashing. That is go do your 9 to 5 and get on that assembly line. Like, I mean, am I crazy to think that? Because I feel like I've been red pilled over the last few years.
No, I mean, I think I don't think I could say it any better. I would have said it. I would have said it exactly the same way. And you don't get any better at it either. I mean, it's almost like golf. Don't take any practice swings. Don't take any lessons. Don't do anything. Don't even know how to play the game of golf. Just know that you have to hit the ball, down the fairway. And if I told you that, you would go and hit the ball down the fairway. It might take you 30 strokes to get it in the hole, but you got it in the hole. The same other person, got it in the hole in 4 strokes. He wins more money at the end of his career, which is life, and you win money too. You just make significantly less. I mean, it's not. I mean, it's a pretty simple game. I mean, everything I put effort to, I seem to do better at. Either I lose less or I make more, but I do something about it. Everything I just take a shot on, at the end of the day, at the end of the career, it's probably 50-50 at best, maybe 52-48 one way or the other. But,
we don't have to talk about what you do personally if you don't want to. But I'm just okay.
Nothing's off limits.
So, I mentioned my friend Greg earlier. Him and I are at positions where we are at all-time highs in our portfolio. We've been very fortunate. I mean, we're talking about, 7-figure portfolios at our age. I think that's pretty great.
It's awesome.
And, we've been having these conversations about, is there a certain point where you should be taking your foot off the accelerator and try to extremely de-risk, or is that a mistake? And I'm just curious. I imagine yourself, Tony, like you said, you've been doing this for a long time. I can't even imagine what your portfolio looks like. Do you still trade as actively? Or have you pulled back? Do you just trade for the content and just for the market awareness, but like really it's just beer money, just spending money? We don't have anyone to talk to about this.
Sure.
We're going through our own journey, and there's no one on the street we can talk to. You can't call up Fidelity and be like, hey,
sure.
What have you seen? What have you seen play out? Like, what's your advice? Or not advice, but like, what's your life experience been, and what's been your journey? And I'm curious, like, what's Tony doing? Like, what does Tom do? Like, how are you guys looking at it at a certain point?
Sure. I mean, I would be a liar to say that I trade the same amount of contracts that I traded when I was 21 and 22 and 32 years old. Like I said, as a market maker, which was a lot different edge than a retail investor. I was trading thousands of contracts a day and just trying to make a small amount of money on thousands of contracts a day. I also didn't have, the family, the wife, the kids, the homes, the cars, the responsibilities, taking care of parents, like a whole different thing. So it was a lot easier to trade bigger, go big, go home, kind of thing. Plus I felt like I had an edge being a market maker. As a retail investor, say from 2005 till present today, I thought that, I made a good majority of my money on expiration Friday. So I thought, I'd pretty much coast during the week, trade a little bit when I saw opportunities, a big shot that I am. And then, expiration day, I'd make all my nut for the month, and that was, you can't do that as a retail. I couldn't do that as a retail investor the way I trade with my knowledge. It was just.
So you were essentially using expiration day as like a 0 day.
That's fair? Correct. That's correct. Before 0 day options and everything else like that. Right. Exactly. Because I had done it for, so many years so successfully on the floor. On the floor, I would make my nut. So I'd make my nut, my expenses and everything for the month on expiration day. And all those other days were my profit. So I figured, why not? My expenses are so much less now. I mean, all I have are my home expenses and everything else that I end up spending. I don't have, monthly nut, crowd clerks and everybody else like that, so this would be easy. No, it was a disaster. Then being alone in my room, like I am right now, was a disaster because I'm alone with my demons. Like I have nothing else to do. Sometimes, trading is boring. Sometimes like there's nothing. Sometimes, a lot doesn't go on and you can really get yourself in a lot of trouble. So I missed the camaraderie of being around people. I missed hearing ideas from them. I mean, that's the whole start of Tasty Live was, Tom and I wanted to bounce ideas off of each other and see where we could take it and engage ourselves in our own trading. And we use all our own money on the show when we trade. So, we've been doing this for quite a long time. So it's not engagement. It's not for the show. Some things are for the show. Like I'm not a big earnings trader. Tom likes to trade earnings a lot more than me. I think he does that.
What was the last one that blew up in his face? Oracle, I think.
Oracle. That's correct. I avoided that one.
So did I.
Yeah. No, I wasn't going to trade Oracle. We got too big at Oracle too because he was ignored. And that's what happens. You get bored. Anyway, so for me, no, my trading is significantly less, but I have more capital now. If I would have told a young Tony, with $10,000 in his account, risking it almost every day because he had to, would you do it with a much larger account? It's easier to make money in a larger account and take less risk, and make the same amount of money, whatever your nut is, with a larger amount of money than it is with a smaller amount of money. So no, my trading is significantly down, multiples of fractional of what it was in my heyday.
Do you still trade
every day? Every day, vacation from the beach. There's always an opportunity that I find. I watch it day and night. Even at night, sitting there watching a movie with my wife, I see what the future's doing at night. I think it just keeps you aware. Even if you don't do anything, it just you get a feel for it. You get a feel for it. It's almost like watching a football game, and that's what I love about betting now. Although I think someday it's going to be at a brokerage firm, and the markets will be a lot tighter. But that's what I love about now. You can bet like intra game. A team's up by 20, and they're a 3 or 4 point favorite. I love taking some points on the other team. You know what I mean? Like I just playing the odds that the market makers who made the market originally this morning know what they're talking about. It's probably going to be closer than 20 points. You know what I mean? So I love that about gambling now.
Yeah, we don't need to talk about football. I'm a little sore from last night. I was not great.
Sorry. For the Lions last night? Was that the Lions?
And Mike Evans is out now, and it's like, oh, come on. Like we started off so good. Okay, well, that makes sense. Yeah, I think I'll find out through real life experience, but my intuition tells me that, to your point, the bigger your portfolio gets, ideally your spending doesn't keep up with how fast your portfolio is growing. So you shouldn't need to make that much money. So really, if X is how much you need for your bills and, to have a good life and not worry about things, as your portfolio gets bigger, that amount doesn't really increase that much. And you should naturally be risking less.
Sure.
Right. 1%.
If you saw, no matter how much money you have, if you saw a $50 bill on the floor, would you pick it up?
I would, and I would try to find out whose it is.
Okay, great. But there's nobody around. You just see a $50 bill on the floor. You're going to pick it up, right?
Yeah, I don't like to litter, Tony. I don't like to litter.
Well, no, but you're going to pick it up. So every day I see the market, I see opportunity. I see a $50 bill on the floor. Like I'm not looking, I'm not looking, 5,000 or 50,000. I see money sitting there. I feel like I should get some. Yeah. So I feel like it's what I do. I mean, it's almost like, I'll go back to golfing. If you're a professional golfer and, you wake up and, you drive past a course or a driving range that looks interesting to you, you want to tear it up. you know, like you're not gonna say I want to go to lunch. You're gonna want to tear it up. You're gonna have clubs in the back of your car, you know, even if it's 2 or 3, and you're gonna, you know, you're gonna play that hole. You're gonna see how you can do it. It's a not only is it a challenge, it's a challenge that you think you can win. Like I think I can win every day. I don't, obviously, but I think I do. I think I can.
So, okay, so knowing that you guys do still actively trade that way, and you know, I suspected that must be the case. I doubt it's just because I do this every day,
Mhm.
and I can't imagine stopping. Like, you know, like it's, I don't know if it's an addiction or to your point, it's like it's there. You know how to pick up that $50. How can I just not?
Right.
Like, it doesn't mean I always have to go as big as I am, but like, you know,
No.
I'm scalping Netflix right now, and I'll be out of it before earnings tonight. But like, how can I not? It's like right there. It's for the
Well,
taking.
you see opportunity, and that's really what it comes down to. And if you see opportunity, then you're going to want to seize that opportunity. And I think I see that opportunity every day. I when I look at the market.
So, and so okay, so knowing that, and I think the think tank that is Tasty Trade, Tasty Live, there's so much probabilistic and studies that go into what you guys do in your research. And I know you said twice now that you're not a technical analysis guy,
No.
but do you really not think that, or do you not think that there's a little help? You've probably gotten this like a million times, but if you're going to put on a strangle, right, a naked strangle, it expires 45 days, everything mechanically. You don't think that you can get a little wider by maybe watching momentum go down to pick your whatever. If it's RSI down to a 30 and then put it on one side and wait for it to get, okay. And then, like maybe you get $2 wider, but that $2 could be the difference between, do you not think that there's something there? Because I could tell you there is with 0 days.
I never look at it.
Ever. Have you ever thought about looking at it or even entertaining it?
I don't know how I can say this and be politically correct. So
No. You're talking wrong. You're trying to be politically correct.
we are a firm called Invest Tools. They may even still be around, and there are a lot of other places just like it. They're an educational company, and they, you know, green and red arrows, RSI, momentum, Bollinger Bands. You know,
Why do I feel like you wanted to say bullshit? Bullshit. Got it.
it's not bullshit, but if it helps you push the button, and you think it gives you an edge, I'm all for it. I don't use it. We can make an argument that IVR is encompassing all of those factors in it, and it's the biggest thing that I look at. So maybe you're looking at it on a minute by minute basis. I watch, and you know, I have no problem with it. Like, so I watch /VX, which is the volatility futures. I watch them like they're my grandson. I mean, I watch them all day long while I'm trading all day long, especially if I'm trading something like 0 days, and I key on them. When that starts to get some momentum to them, like they go higher intraday, and then they kind of stop for a second, that's when I jump on my 0 day trades. So we're probably looking at the same exact things, just looking at them a different way. So, but I do love the way you're going to ask the question. You're going to say, do you really think, implying that there's no way that you can really not look at them? You know what I mean? So because you believe in it. And I love that, because you're trying to put, even to me, who you think is, you know, an established person, or maybe I am, or maybe I aren't, but even me, you're saying, with all due respect, don't you think you should look at this? Because you want to say it works. If it works for you, you should never stop.
It's not that I think it works. It's more so just the thought of, can you get a little wider? That's it. But the question to me is always just, can you get wider? Right? If it moves down, that means I can go, you know, I don't know if it works. For all I know, RSI, like all these things are true until they're not true. You know, even with the probabilities, right? Like that's what gamma is. It works until it doesn't work, and then you get blown out. So,
well, nobody wants to be blown out. It comes down to size. So, you know,
blown out in the trade, just the trade.
If you're small of an account, then you go to like a vertical strike.
Yeah, I always tell people if you're gonna when people talk to me and ask me, if you're gonna start trading, I always tell them do 100 trades, one contract, and then you'll know a lot. You'll
Yeah.
live through a lot,
Yeah.
and you'll probably be good. And odds are you won't listen to me. You'll do something stupid, but at least maybe you got the 30 trades and you'll learn something in those 30 before you go. So you mentioned investors, and
Yeah.
I swear it's like you knew some of the things I want to hit on. I've mentioned my best friend Greg here a couple times now. I asked him like, "Hey, I'm gonna be on with Tony, the Battista," and I was like, "Is there any like questions that you would want to ask that like maybe you just can't get out there? You can't just go ask some AI tool." And there was one. We've talked about a lot of different things that I know he would want to also know about or hear your perspective on. But
Mhm.
there's someone that met you guys through the Investors course,
Yeah.
and very famous person. I think you guys made her famous, Karen the Super Trader.
Sure. She just passed, by the way.
Oh my God, I did not know that.
Yep.
Wow,
Yep. About,
sad.
2-3 weeks ago.
Oh man, well,
That's okay. Go ahead.
yeah. Well, his question was, we're doing all this trading, and we
Mhm.
can always talk about, hey, the great probabilities. I could talk about, I share my wins, losses on trades with everybody, so everyone can see how profitable I've been. They see it's like, oh, it's all great, but I also like to share where things can go wrong, right? Like
Yeah.
I like to be as transparent as possible. What happened with Karen and the SEC? Because I've watched several of her videos,
Mhm.
and it's really hard to understand. And again, I don't know if you're allowed to talk about this or not. I don't know how any of
I don't
that
care about
worked.
anything.
Okay, I love that you keep saying that.
Mhm.
What happened there? What got her in trouble? And was it that the SEC truly didn't understand what it means to roll, or was it because she was
No, they understood what it
pl-
meant to roll.
okay? So was it that she was? Well, why don't you just tell me what happened there?
Sure. 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 Say what you want about Karen, the super trader. I mean, I never benefited financially with her. I didn't invest any money with her or anything else like that. She traded through our brokerage firm. I watched her take her account from, basically zero to millions of dollars. She raised money too, and took it
Yeah.
and raised millions of dollars. As an accountant, what I'm going to tell you, she should have known better. She didn't understand, or she played stupid and didn't understand what a role was. And, when you open up a company like she did, you have bylaws and you get attorneys, and they all did her dirty too, because they didn't understand what a role was. And her accounting firm didn't understand what a role was. So basically what she was doing is, let's say the futures were trading 1,000, and they went lower and she was long them, for argument's sake. I know she was trading SPX. I'm just trying to make it simple for
Yeah.
everybody. And they were at 800. Since she rolled them, she didn't take the loss. She was rolling them. She never booked that $200 loss that she should have had. When you roll, you are changing your basis, whatever you want to call it, but you have a loss or a gain at that time. Well, she was keeping her high water number too high, meaning like, it was still $1,000 and not $800. And then she was a very religious person too. I don't know if people understand this. I mean, most of the money she made, she gave to wells in Africa for water for children in schools. So she was a pretty religious and humble person in her daily life, which I think she gets a lot of backslapping for, from a lot of people who don't really know the full story. So she did this in her accounting. So let's just say for 6 months or a year, she really was underwater, meaning losing money, but she was taking money out for her charity, and spending it there, not properly. Like, I mean, that's not what you're mistaken. You're not here. You're here, and you don't get any money, even if it is to give wells water to children, or
Mhm.
to spend for your own food. I mean, you don't get it because you don't get money until you're over your high water mark. That's how it works. But eventually the market cooperated and her trading cooperated, and she made millions. And then she split it up with all of her investors. So no investor that I know of that stayed in her fund ever lost money.
Okay. That helps clear it up a lot.
That's Karen, the super trader, in a nutshell, the way I understand it, the way Tony Battista understands it.
Yeah. So like I was saying earlier about myself, I share my P&L with people, and I show like how many trades I've done in a day, and the ups and downs. And if people were to look right now for October, they'll see that I went from $10,000 up in the first 2 days to then all of a sudden I was down 11 grand.
Uh-huh.
And I think this is what you're talking about, because what I did was Tesla was coming down. I right now have cash secured puts. I'm looking to pick up more shares in Tesla, but there's juice there. So I said, you know what? I'm going to roll these down. I'm going to collect an extra 5 grand in premium. Why wouldn't I? So I'm going to do that. But I did have to, I call it synthetic, but synthetically book a loss. But I'm collecting more premium, so it makes sense to do that. But she wasn't.
It's not synthetic loss. I mean, if
it's real loss.
God forbid, at that moment, that's how much money you have.
Correct.
And when it's accounting, that's your number at the end of the day. And as an accountant, she should have known better, because that's what she was in her previous life. But I know a lot of accountants who make the same mistake. So as a trader, I don't know how she made the mistake, because it's so logical that it's so illogical to, not to know that you have that loss. I mean,
Yeah, at the end of the day, a roll, you're still closing out the position. You're taking that P&L and then you're opening up a new one. That's technically a new trade. The roll is just an easy way to do it mechanically. And that's why, again, for people, when they see it, you see 10 grand, negative 11. Like, what happened there? It's like, well, we're doing things. Cool. So I know your time's probably...
I got to go at the bottom of the hour, if you don't mind.
Okay. Yeah, no worries. 10 more minutes. Does that work?
Sure.
Or 8? So let me ask you 2 more questions. So April was a very interesting month.
Yeah.
Very interesting. And I know you guys have a lot of studies about when, the S&P drops about 2-3%, like what the next day likely looks like. And, like everything anyone knows kind of got blown out of water, because it was like down 3%, next day down 4%, next day 2%, whatnot. How did you guys manage that? And what was your thought process during that or I guess, how would you advise people in a situation like that? Or not maybe advice, I don't want to use the word advice, but how do you think about that and the best way to approach those moments?
I mean, we were pretty under invested, so we had powder. We had powder.
So you want the work.
Yeah, to take advantage of it. Now, remember, we just come before we dropped, in February there. I mean, we were just off of all-time highs, right? You know what I mean? So we slowly kind of came down, and into April, we had a little bit of movement lower into the market. Then we had the big drop. So, I mean, we were a little early. I mean, like everybody else, just like I told you, I'm not going to sell the top in this market. So I'm going to miss that. I didn't buy the bottom there either. I mean, listen, I bought E-mini S&Ps at 690. They went to 666, before the crash. And I don't think I made a lot of money on the 690 hold. And I said to myself, I'm never selling these futures when I bought them at 690. But when futures are moving 4 or 5 handles a day, and all of a sudden they go down 30 handles, when you get back to a profitable trade, you do something with it. You don't say, okay, now I'm going to sit there with this. And it was the same way in April. I mean, we were a little bit early. Size was smaller earlier. It got a little bit larger. But it really came down to, the market cooperating, use trading enough size. And here, again, comes with a more capitalized account better than a smaller account. A smaller account, you're going to have to throw out, you're going to have to get out of these trades.
No, that makes sense. So last question,
Sure.
I'll pick your brain on. And again, thank you so much for...
Anytime, man, anytime. I'll do it again. More questions another time. Yeah.
Oh, good. Oh, well, consider yourself on another one.
Okay.
So you mentioned earlier that you believe that you can essentially beat the S&P trading.
Sure.
And when I say you, I don't mean Tony. I mean just in general that it's doable.
Everybody.
But
because we're gonna take more risk.
Okay, so hold on to that thought, because
Sure.
I love where you're going to go, where I think you're
Mhm.
going to go with this.
Sure.
You hear, whether it's Warren Buffett, Charlie Munger, whether it's everyday people just talk about, oh, the S&P, like it's down 20% in the last 3 years. Like, d- don't bet against the market. Don't think you're smarter than the market, all these things. And it seems like the same way I was talking about before, people say, invest in your 401k, put it away, and then shut up and forget about it and go do your own thing. And you hear people talk about all the time, the best 401ks are the people who lost their passwords. You hear all this crap out there nonstop.
Sure. Sure.
And I'm sure a lot of it is true, but I also feel like a lot of it is marketing in a
Sure.
way. It's like, man, they're really trying to push this narrative of just go into indexes and don't do anything else.
Sure.
So is that BS to an extent? And if it's not, and it is possible to beat the S&P, why is it possible trading?
Because it's
And
too
is
hard.
that
Because it's too hard. Like people, like here, you, doctor, lawyer, Indian chief, whatever you are, you make a lot more money than me. For argument's sakes, more than you, more than me, more than our audience. They're smart people. They make millions of dollars. And then they take their millions of dollars that they saved and they give it to a guy like you or me or a financial advisor. And they say, take my money. You have my best interest about, you know, the markets because you have you took the Series 7 test. That means you all of a sudden know the market, which the Series 7 test is very little on the market knowledge on where the market's going one way or the other. It's all about risk tolerance for an individual. It's the dumbest test in the entire world. I actually failed it the first time I took it. And the second time, I believe, because I thought I didn't study for it. Anyway, you give that money to somebody who then puts it into the S&P or wherever, gold, they give you the whole gambit of the market the very next day. It was the very next day, the time in the market to get all in. No, that's the time they get paid. Because as soon as they put your money to work, they get paid. So it's all about, you're not smart enough, even though you're a multimillionaire and you started with nothing, you're not smart enough to learn how to do this market. For crying out loud, just buy the S&P. I mean, if you really want to give money to somebody, just buy SPY. You'll get all the dividends. If market goes up 10%, you'll make 10%, go down 10%. You'll beat every fund manager. You'll beat 80 to 90% of the fund managers, and you're not going to pick the fund manager who beats the S&P anyway, because they have their fees involved in it. So it really comes down to the same reason why they say just stick your money in a 401k or stick your money with a money manager is the same way, because it's too complicated. Leave it to the professional. Tom told a story where he had an ex-Fed chair was like the moderator or something like that. And Tom asked him, where you put your money? He goes, I leave that to the professionals. If he doesn't know where the Feds are going with their money, who knows? You got to leave it to the professional. It's all bullshit. So learn.
And so you believe, or your Tasty, I think, has been quoted as saying, as conservatively, people can probably expect to do 1% to 2% per month on their net lick. Was that fair?
With reasonable risk without like ramping it all up. Yeah. Yeah. Now, I don't expect you to do it month after month.
Mm-hmm.
I expect you to have 2 or 3 months where you don't do that, or 4 months where, you get unlucky, you take too directional, or it's not directional enough. But yeah, I mean, if risk-free rates are 4 or 5%, then you have to make a multiple of 4 or 5%. Otherwise, just stick your money in risk-free assets.
So why don't more people do this? Why is this not?
Because they don't want to learn. It really just comes down to learn. It's too complicated. It's math. I wasn't good at math at school. It's not that much math. It's just numbers. It really just comes down to they don't want to learn. They'd rather, watch Netflix, or they would rather get good at golf, or they'd rather watch sports.
Okay.
Well, we all do what we want to do. Like, don't let anybody tell you any differently. Like, we all do what we want to do. And that's what makes people happy. And thinking about the future doesn't make them happy.
Man, that's heavy. All right. Well, we can leave it at that. Tony, I appreciate you taking the time to come on here. And I'm definitely going to take you up on your offer because I have a lot more I'd like to pick your brain on.
All right.
Hopefully we can, maybe we can sync up sometime in the new year.
I'd love it. I'd love it. Let it fly.
All right. I appreciate it.
Thank you, my man. Peace.
Yep. Cheers.